Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance above the 91.75 to 93.75 pre-market support, leaving the buy side in control. Off the open on the smaller time frame, as long as buyers can hold ES above 91.75 to 93.75, we could still see a move up into 99 to 25.01 and the 25.04 half to 25.0675 initial resistance zone, and then we have the all-time high at 07 quarter. So given that the S&P is trading in a larger time frame range and balance, our short-term bias heading into the open is going to be neutral, and that means that we have to continue to be nimble and flexible with our real-time intraday bias. And then on the smaller time frame, immediately off the open, that 91.75 to 93.75 pre-market support will also provide a tell regarding which side is really dominant and in control. As long as we're holding above pre-market support and we're continuing to see bullish signals in real time, then there is still potential for a break above 99 to 25.01 for a move into 25.04 half to 25.0675, which marks the upper edge of the balance and the all-time high. And then in order to put in any kind of sustainable breakout beyond 0675 and the all-time high, we would have to see broad market strength, sustained upside momentum, and participation from the other markets. Recently, the weakness in Nasdaq has been weighing on the S&P, so if we start to see NQ heading higher in any meaningful way, if NQ takes out, for example, 58.96 quarter, and then starts trading above 59.11 to 59.16, that would support an upside move in the S&P, and then that weight would be lifted. On the downside, in the event of a failure and break below 91.75 to 93.75, ES could quite easily move lower into the 85 to 88 initial support. That marks the bottom edge of the recent balance, and then in order to put in any kind of sustainable breakdown below 85 to 88, we would have to see a lot of broad market weakness and sustained downside momentum. Below 85, we have support at 78 to 80 and 74 to 76, and those are still areas where responsive buyers can be active on first test, especially if the market is exhausted into one of those zones. So again, our short-term bias heading into the open is going to be neutral. We have to be pretty nimble and flexible with our real-time intraday bias. We have to see how the underlying internals are developing, what the momentum situation looks like, but we can also use the 91.75 to 93.75 area to help us determine whether buyers are still in control. If yesterday's rejection is really going to stick, then ideally you want to see the market holding above 91.75 to 93.75, and a failure to hold above that zone would be the first sign of weakness. So those are the main ideas heading into the open. Let's see if the buyers can maintain control and push the market back up towards the 04 half to 0675 initial resistance, and we'll take it from there.